Fort Myers promises affordable beach living at $325,000 with no state income tax. The Florida dream sold to retirees, families, and investors across the country. But behind the sun-soaked listings and picture-perfect pitches, something is quietly devastating homeowners. Insurance premiums that have exploded from $2,000 to $16,000 or more overnight, HOA bills reaching new highs, and property taxes that refuse to stay flat. Owners are suddenly locked into homes they can't afford to keep and can't sell without taking a hit, while simple cost of living adds up to $55,000 a year, double what most locals earn. If Fort Myers is supposed to be affordable, what's really driving the financial crisis, no marketer wants to admit. A quick scroll through Fort Myers real estate listings turns up a familiar script: affordable coastal living, no state income tax, move-in ready at $325,000. The photos show palm trees, turquoise pools, and sunlit kitchens. Agents highlight open floor plans and granite counters, but the fine print is a different story, if it appears at all. Nowhere in the headlines do you see the words insurance premium, flood zone, or special assessment. Instead, the ad copy leans on the dream. Own your slice of paradise, walk to the beach, enjoy low Florida taxes. MLS listings routinely tout HOA amenities, tennis, pools, security gates, but skip past monthly dues or the looming risk of five-figure assessments. A condo at $325,000 might mention reasonable fees in passing, but leaves the real number buried 3 pages down, if it's listed at all. Low monthly cost banners appear above properties with $600 a month HOA bills and no mention of hurricane reserve requirements. Even the no income tax refrain is front and center, while property taxes, which average $3,000 to $3,500 annually for a median home, are either omitted or glossed over with a vague "check with county for details." The marketing machine banks on quick math: purchase price, mortgage rate, maybe a nod to property tax. Insurance? Not a word, even as premiums have jumped to $8,000, $15,000, sometimes $20,000 a year for the same house. Listings rarely mention mandatory flood insurance, even though most of Fort Myers sits in a floodplain, and new FEMA maps are pushing more homes into high-risk zones. Buyers are invited to imagine a simple, sun-soaked life, but the real numbers are missing from the sales pitch. The result? A price tag that looks manageable, until the bills start arriving, and a cost of living that's anything but hidden for those who sign on the dotted line. Buyers pouring into Fort Myers come from every corner of the country, but the pitch lands hardest with 3 groups. Retirees, drawn by the promise of sun, safety, and a fixed cost of living, arrive with decades of savings and a dream of never shoveling snow again. Many have sold homes up north for a tidy sum, hoping to stretch their retirement dollars on the Gulf. They're searching for stability, predictable bills, low maintenance, and a sense of community, often choosing condos or gated neighborhoods that promise all-inclusive peace of mind. Young families priced out of big city suburbs see the glossy listings and imagine a fresh start. They want space for kids, good schools, and a backyard for birthday parties. Some are relocating for work, others chasing the myth of affordable homeownership and year-round outdoor life. For them, Fort Myers seems like a rare place where a dual-income household can still buy a detached house near the water, far from the cold and chaos of their previous lives. Then there are the investors and snowbirds, those with second homes or rental ambitions. Some aim to cash in on the seasonal rush, banking on winter months filled with short-term tenants or family visits. Others are part-timers, splitting the year between Florida and another state, convinced that owning a slice of paradise will pay off in rental income or future appreciation. Each group brings a different set of expectations and vulnerabilities. Retirees count on fixed incomes that don't adjust for surprise expenses. Families often stretch to afford the move, betting on stable jobs and manageable monthly bills. Investors do the math, but the numbers can change overnight. All are drawn by the same vision: a home that feels attainable, a lifestyle that looks effortless. What unites them is what they don't see coming: the hidden costs lurking behind the welcome signs and palm-lined streets. Insurance premiums in Fort Myers aren't just rising, they're detonating. Before Hurricane Ian, a typical homeowner's policy cost $2,000 to $3,000 a year. Now renewal notices come in at $8,000, $12,000, sometimes even $16,000 or more. Waterfront homes and barrier island properties can see annual bills of $25,000, $30,000 or higher. Numbers that once sounded like typos, now printed in bold at the top of the invoice. The cause is no mystery. In the wake of Ian's $78 billion in damages, insurance companies didn't just raise rates, they packed up and left. Names like Farmers, United Property and Casualty, and FedNat vanished from the Florida market, either through bankruptcy or by refusing to write new policies. In 2024 alone, more than a dozen carriers withdrew or stopped renewing in high-risk zip codes, the ones that remain cherry-pick the lowest-risk homes, leaving everyone else scrambling for coverage. When private carriers exit, there's only one place left to turn: Citizens Property Insurance, the state-run insurer of last resort. Citizens enrollment has exploded, doubling its policy count since 2021. In Lee County, more than 40% of all new policies now sit with Citizens, a share that would have been unthinkable just 5 years ago. Even with a modest average rate reduction of 5.6% announced for 2025, Citizens bills routinely land at $7,000, $10,000, even $18,000 per year, often with higher deductibles and tighter limits than the private market ever offered. The pattern is clear across the region. A Fort Myers Beach cottage that paid $3,800 in 2021 now faces a $14,000 renewal. A mid-island home on Estero paid $2,400 pre-Ian, then $6,900, then $12,200 in 3 consecutive years. Each hike explained by a new round of carrier withdrawals or reinsurance spikes. Brokers report some clients with $30,000 policies forced to accept Citizens coverage with narrower terms or risk going uninsured altogether. Industry spokespeople point to the triple threat: hurricane risk, runaway litigation, and soaring reinsurance costs. Florida, with just 9% of the nation's property claims, accounts for nearly 80% of its insurance lawsuits. Each lawsuit and every billion-dollar storm gets priced into the next year's premiums, driving a cycle that feels impossible to escape. The effect on household budgets is immediate. The old math, $2,500 a year for insurance, now looks like a rounding error. For many, the premium alone rivals or exceeds the mortgage payment. And these bills arrive before flood insurance, before taxes, before HOA fees. For families and retirees alike, the insurance invoice is no longer a side note. It's the headline expense, and it keeps climbing. Flood insurance in Fort Myers is not optional for most buyers. It's a lender-imposed requirement stacked right on top of the already swollen homeowner's premium. The rules are straightforward. If your property sits in a special flood hazard area and you have a federally backed mortgage, you must carry a separate flood policy. That second bill is not just a formality. For homes in AE or VE zones, annual premiums through the National Flood Insurance Program routinely run $2,000 to $5,000 and can stretch to $10,000 or more for waterfront or low-lying parcels. Even homes that never flooded before are getting swept into the high-risk pool. The reason? FEMA's ongoing update to the flood insurance rate maps, the so-called firm revisions, has redrawn the boundaries for thousands of properties across Lee County. What started as a technical process in 2018 now hits with real financial weight. The latest digital maps, released in 2025, push more of Fort Myers into flood zones that trigger mandatory coverage. Hundreds of homes in places like the Mullet Creek Basin and San Carlos Park face new insurance requirements, while some properties are slated for removal from hazard areas. The appeals process runs through September 2025, but few owners win relief. Once the new maps are finalized, likely in summer 2026, the expanded AE and VE zones become permanent, and so do the insurance bills that follow. Premiums are not calculated in a vacuum. They hinge on elevation certificates, base flood elevation, and the specifics of the property. A house with its first floor raised well above the flood line might qualify for a lower rate, but older homes, built before modern codes, rarely get a break. Private flood insurance exists, but most lenders still default to NFIP policies, especially for government-backed loans. And when the maps change, so do escrow requirements. Lenders automatically increase monthly escrow to cover the new, higher premiums, leaving owners with little warning and no way out. The expansion of high-risk zones means more buyers are blindsided at closing. A property advertised as outside the floodplain last year may come with a mandatory $4,000 flood policy this year. Even buyers who paid cash find themselves forced into coverage if they refinance or take out a home equity loan. For families already grappling with ballooning homeowners' premiums, the flood bill is a second punch, one that can tip the math from affordable to impossible. FEMA engineers and local floodplain managers defend the new maps as a necessary reflection of real risk. They point to rising sea levels, changing rainfall patterns, and the costly lessons of past storms. But for Fort Myers homeowners, the result is simple. Another non-negotiable expense, imposed by shifting lines on a map and enforced by mortgage contracts that leave no room for argument. The insurance squeeze is not just about hurricanes anymore. It's about every inch of elevation, every digit on the firm, and every dollar siphoned from household budgets the moment the new maps take effect. Mortgage approval in Fort Myers has become a high-wire act, with insurance volatility turning the closing table into a moving target. Lenders, wary of runaway premiums, now factor insurance risk directly into their loan offers. Rate sheets from regional banks show a 0.25% to 0.5% premium added to standard interest rates for coastal or high-risk properties. A quiet penalty that pushes monthly payments higher before the ink is dry. Loan officers report that files kicked back for reapproval are routine. One policy renewal at $12,000 or $15,000 can force a borrower to bring 25% down instead of 20%, just to keep the debt-to-income ratio in line. Escrow calculations, once a sleepy afterthought, now drive the entire approval process. A $325,000 home with an $8,000 insurance policy sets the monthly escrow at about $666. But if that policy jumps to $18,000 at renewal, as hundreds of owners discovered after their first year, the servicer recalculates $1,500 a month, every month just for insurance. That's an $834 jump, overnight with no appeal. For some, the total escrow demand, including flood insurance and taxes, hits $2,000 or more. The mortgage payment becomes a moving target, impossible to pin down at closing. Loan estimates and closing disclosures tell the story in black and white. Buyers see an initial monthly payment that fits their budget, only to be blindsided by an escrow shortage letter a year later. Servicers demand the shortfall be repaid within 12 months, layering hundreds of dollars onto each payment. The result? Families who stretch to qualify find themselves underwater before they've unpacked the last box. Lenders in Fort Myers now routinely delay closings until a paid insurance binder is in hand. If no affordable policy can be secured, the deal collapses. Some buyers, desperate to close, accept force-placed insurance at double the cost, knowing it will trigger a payment shock down the line. Others walk away, leaving contracts and deposits behind. Even buyers with strong credit and large down payments aren't immune. Jumbo loans for waterfront homes carry higher rates. And some lenders quietly refuse loans on properties with uncertain insurability. FHA and VA buyers, limited by strict payment-to-income rules, are often priced out entirely by the insurance line item on the worksheet. For existing owners, the story is just as grim. Those with 2 to 3% fixed-rate mortgages are locked in, not just by interest rates, but by the threat of even higher insurance bills if they move or refinance. Any attempt to tap home equity or switch lenders means recalculating payments at today's insurance rates, which can erase the math that once made home ownership seem affordable. The mechanics are clear. In Fort Myers, the cost of borrowing is no longer just about the price of money. It's about whether you can secure and keep insurance, whether your escrow can absorb the next premium spike, and whether you can survive the payment shock when the numbers change. For many, the dream of a fixed monthly payment is gone, replaced by a mortgage that grows with every storm season. Property taxes in Fort Myers don't make the real estate flyers. Yet for every buyer lured by the promise of no state income tax, the reality lands with the annual bill from the Lee County tax assessor. The county rate hovers between 0.9% and 1% of assessed value, so that $325,000 home comes with a property tax of $3,000 to $3,500 each year, even before factoring in exemptions or appeals. Unlike income tax, this bill arrives regardless of how much you earn, and it's just the starting point. Special assessments are layered on top, often with little warning. Beach renourishment fees, stormwater projects, and infrastructure upgrades add hundreds or thousands to the annual total. In 2024, Fort Myers Beach homeowners received a $1,200 per parcel assessment for sand replenishment after Ian, while some mainland neighborhoods paid extra for new drainage systems. These aren't one-time hits. They recur as storms and sea levels reshape the coastline. Tax rates rarely drop, and assessment values climb as property appraisers adjust for market jumps. Even homestead exemptions, which offer some relief for primary residents, can't shield owners from the cost of living in a region where public services and storm recovery depend on steady tax revenue. The upshot? Florida's no-income tax pitch hides a fixed, unavoidable cost that gets bigger with every year of rebuilding and every new infrastructure project. For Fort Myers homeowners, the real tax story isn't about what you save. It's about what you pay every single year. Monthly HOA dues in Fort Myers used to blend quietly into the background. $250 here, $400 there, just another line on the budget. That changed after Florida's new reserve statute, passed in the wake of the Surfside collapse, forced every condo association 3 stories or higher to confront a stark math problem. Now fees that hovered under $400 a month have jumped to $700 or more, with many buildings pushing through increases of 30, 50, even 70% in a single year. For a riverfront unit at Harbor Ridge, the bump meant $420 a month in 2021, ballooned to $700 by mid-2024. At waterside condos, the monthly bill leapt from $320 to $590 in just 2 cycles. But the real shock comes in the form of special assessments. Owners at Estero Bayside were handed a $24,000 bill to meet reserve requirements. At Harbor Point, the number was $38,000, due whether you live in the unit or not. Across Fort Myers Beach, 5-figure assessments have become routine. $20,000, $40,000, sometimes $60,000 or more per unit, all in the name of structural integrity and hurricane repairs. One HOA treasurer put it bluntly, "It's not optional. Every owner pays. We collected $27,000 from each unit after Ian just to meet the new law. For many, these are not one-time hits. Owners now face a permanent squeeze. Higher monthly dues locked in by statute, plus the looming threat of another special assessment every time a reserve study uncovers underfunded repairs. The promise of predictable, low-cost condo living is gone. In its place, a financial wild card that can wipe out savings or force a sale, with no warning and no appeal. Salt air and subtropical heat take a silent toll on every home in Fort Myers, no matter the zip code. Contractors warn that standard building materials simply do not last here. Paint blisters, metal fixtures corrode, and wooden trim warps in a single season. Impact windows, now the gold standard for storm protection, cost between $10,000 and $40,000 to install, depending on the size of the house and number of openings. Older homes built before modern codes often require the full retrofits just to qualify for insurance or meet new wind mitigation standards. Roof lifespans shrink in the Gulf sun. What lasts 25 years up north needs replacement every 15 to 18 years here, with typical jobs running $15,000 to $30,000. HVAC systems battered by humidity and salt fail after 10 to 12 years, sometimes less if maintenance lapses. Replacement units start at $8,000, and service calls pile up as coils rust and compressors seize. Even stainless steel appliances, marketed for their durability, show pitting and stains after a few years near the coast. Engineers point to the relentless cycle: maintain, replace, repeat. Every owner budgets for annual touch-ups, but the real cost comes in waves. Big-ticket repairs that arrive early and never wait for a convenient time. In Fort Myers, the climate is not just a backdrop. It is an active participant in every household budget, quietly eroding the bottom line year after year. Healthcare and transportation stack new costs onto already strained budgets in Fort Myers, especially for retirees living on fixed incomes. Medicare Advantage plans in Florida, once seen as a safe bet, now come with higher premiums and narrower networks than many expected. Annual out-of-pocket costs for supplemental coverage and prescription plans can easily reach $2,000 to $5,000 per person, numbers that catch many new residents off guard. For a retired couple, that's another $4,000 to $10,000 a year, just to keep basic medical needs covered. Getting around isn't cheap either. Fort Myers offers little in the way of public transit, leaving most residents car-dependent. Auto insurance rates in Florida run 20 to 30% above the national average, with annual premiums often topping $2,400 for a single vehicle. Add in the relentless salt air, which corrodes brakes and undercarriages, and car ownership becomes a revolving expense. Frequent repairs, earlier replacements, and higher insurance deductibles. For retirees who budgeted for sunshine but not for breakdowns and medical bills, these costs pile up fast. One couple, both in their 70s, saw their annual health and auto bills jump by $7,800 after moving to Fort Myers. The math is simple. Every extra dollar spent on premiums and repairs is a dollar less for groceries, savings, or grandkids. The squeeze isn't just about housing. It's the daily cost of staying healthy and mobile in a place that promised easy living, but delivers relentless bills. Add up every line on the ledger for a typical Fort Myers homeowner, and the dream starts to unravel. The math isn't subtle. Insurance for a modest $325,000 house now runs $15,000 a year, sometimes more if you're anywhere near water. Flood insurance adds $3,500. Property tax, another $3,250. HOA dues, $4,800, assuming you avoid a special assessment. Utilities with air conditioning running for 11 months tally $5,200. Maintenance and repairs, from salt-eaten appliances to mandatory hurricane prep, swallow $3,000 or more. Layer on pest control, hurricane supplies, and a modest reserve for inevitable surprises. And the annual subtotal before mortgage is $31,750. The mortgage itself is no relief. With 20% down and a 6.5% rate, monthly principal and interest on a $260,000 loan comes to $1,644, $19,728 a year. Now the total stands at $51,478, and that's before factoring in healthcare premiums, car insurance, or transportation. For many, the true number is higher. A household hit with a $20,000 insurance renewal finds their annual cost ballooning to $59,228. That's $4,935 a month, just to keep the lights on and the roof insured. Financial advisors use a 28% housing cost guideline to measure affordability. By that standard, a home with $59,228 in yearly costs requires a household income of $206,000. In a city where the median is $57,000, the gap is unbridgeable. Every year the numbers tighten. Owners who bought at lower rates can't leave without facing even steeper costs elsewhere. Those who stay are locked in, watching bills climb while their equity erodes. The spreadsheet isn't a warning, it's a verdict delivered in black and white. Owning a second home in Fort Myers or banking on rental income to offset costs used to be the ultimate snowbird strategy. That math no longer adds up. Seasonal owners face a full year of insurance, taxes, HOA dues, and maintenance, but only occupy their property for a fraction of that time. The annual carrying cost for a modest condo now routinely tops $30,000, even before factoring in mortgage payments. For a retiree from Michigan or New York, that means paying $2,500 a month just to keep the lights on in a place they visit for 3 months, maybe 4. Investors hoping to cover expenses with short-term rentals hit a wall. The high season brings strong demand, but local ordinances and HOA rules limit rental frequency and duration. Property management fees skim 20 to 30% off the top, and vacancy risk lingers in the off-season. After insurance, taxes, and cleaning, the typical 2-bedroom unit grosses $18,000 to $22,000 in annual rent, barely half of what it costs to own. One small landlord who bought in 2021 watched his monthly expenses climb from $2,200 to $3,900 in less than 3 years. His rental income hasn't budged. The story repeats across the coast. Owners who once saw their Florida home as an appreciating asset now treat it as a luxury expense, an indulgence, not an investment. Some try to recoup losses by raising rents, but the market is saturated, and renters balk at the new rates. Others accept the hit, writing off the loss as the price of winter sun. In Fort Myers, the snowbird calculation is simple. Pay $30,000 to $50,000 a year for a few months of paradise, or walk away before the next bill arrives. For many in Fort Myers, the math isn't just theoretical, it's personal. A retired couple on the east side watched their insurance bill climb from $3,200 to $17,400 in 3 years. Their Social Security checks don't stretch far enough, so they skip dinners out, cancel trips to see grandchildren, and pray each storm season passes without damage. The house they once called a nest egg now feels like a burden, one they can't afford to keep or sell. A young teacher and her husband, both working full-time, saw their mortgage and escrow payment jump by $1,100 a month after their first insurance renewal. Their combined income, just under $60,000, barely covers the essentials. They've cut back on groceries, delayed medical care, and started a side hustle delivering groceries on weekends. The dream of a backyard birthday party for their daughter has faded into late-night worry sessions about what else they can cut. An investor who bought a duplex in 2021 to supplement his retirement now finds himself underwater. Rent covers less than half the monthly outflow after insurance, taxes, and HOA.